The banking industry still has a lot of work to do in terms of rebuilding trust. There is still a lot of anger out there directed at the financial industry for the crisis, and that's something that has to be addressed. You've got to start by acknowledging it, and then you've got to rebuild trust. I think banks have to start serving clients and really serve them rather than serving themselves. That's a transition. That takes time. We're there as a bank. The financial industry has to do that more broadly around the world.
Challenging times for the financial institutions industry overall, so hard not to be cautious. I have to say we are beginning this year on a mildly better note than the one we finished on in the fourth quarter. The underlying parameters that drive ROE. In the end, there's a numerator, which is earnings, and then there's a denominator, which is capital. Thanks to Basel III, and a lot of it is justified, the amount of capital that will underpin financial institutions, those needs will nearly double. So as you move from Basel II to Basel III, you're going to get a doubling of the denominator. And thanks to a series of restrictive legislation which is coming, there's going to be restrictions on business model as well. Both of those are unhelpful and will not argue for higher ROEs for sure. Having said that, there's going to be powerful and is powerful consolidation within our industry, which means that those that survive this will actually wind up with a margin expansion over time.
The universal banking model is very, very strong. It's a diversifier of risk, not an aggregator of risk. And when I look at the impact of Barclays during the most difficult times in the environment, we've seen an inflow of deposits and frankly have been a stabilizer for the financial markets. Both the US and the UK were probably a bit faster in terms of adding capital, reducing leverage, adding pools of liquidity. I think they were a bit in terms of the consolidation of banking. And I think there's still some challenges across Europe where a number of banks with the higher capital rules still have businesses that are subscale.
The world has changed, and the banking industry has gone through a fundamental change, and we have to readjust. If and when we come out of this, not if, when we come out of this and we start reperforming, obviously compensation will reflect that. Until then, we have to respect the fact our shareholders have to get paid too.
What do you say to people who tell you they're unhappy? Take a hike?
No, I say, listen, you're naive. Read the newspaper, number one. Number two, if you put your compensation in a one-year context to define your overall level of happiness, you've got a problem which is much more bigger than the job. And number three, if you're really unhappy, just leave. I mean, life's too short.